Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour time frame with the bearish scenario, where we are looking for a finished A or 1 5-wave structure to the downside, followed now by a 3-wave B or 2, before then continuation to the downside in a wave 3 or a wave C. The most common target for wave B is between the 382 and the 886 Fibonacci, taken from the high to the low of wave A, giving you a target area between 42.5k and 47.9k. Common target area for wave 2 is between the 05 and the 786, 43.8k to 46.8k. Now in this wave B or 2, we are looking for a 3-wave corrective structure to the upside. The lower time frames suggest that this is an impulsive move to the downside, so then in this scenario we're looking for a wave A to finish, then a wave B, then another wave C to the upside, before then continuation to the downside. If price continues towards the upside in a straight line towards the 786, that is when the probabilities are really changing for bullish scenarios to take the highs, because for a first structure in a wave A, hitting the 786 is very high. If we go to the bullish scenario, then we are looking for a similar price action. We are looking for a 5-wave structure, but not a wave A this time. We are looking for the end of a wave 1, followed by a 3-wave corrective structure to the downside in a wave 2, before then continuation to the upside. So the price movement is going to be something like this, and in the bearish scenario we are looking for the same movement in price, but then an ABC, while in the bullish scenario it's a 1, 2, 3. The most common target for a wave 2 is the 05 to the 786, taken from the low to the high that we have at the moment. However, lower time frames do suggest we might have another high to come because of an 886 touch. More about that in a second. And if price does move to the upside, we are going to move these fibs to the upside as well with price. Currently, the 0.5 is sitting at 41.2k, the 786 at 39.6k. The 382 and the 886 are less common targets. The 382 is sitting at 41.8k and the 886 is sitting at 39k. Invalidation for this scenario is price moving below this low at 38.5k. Now we have been in this range for a long period of time. It's been a beautiful range so far, a little bit of a deviation, but we managed to get back inside the range. Once we got back in the range, price has moved towards the point of control, and this is then also where we have resistance at the moment. If price can pass the point of control, probabilities of course increase to move to the value area high, where we also have this wide support resistance area between 44.3k and 44.8k. If we go to the lower time frames and we have a look at the impulsive structure to the upside in a potential wave A or 1, then we have an 886 touch here, and this one is actually very important. This is an 886 taken from this high to this low, and any move coming off the 886 has a higher probability of being a wave C or a wave Y, increasing the probabilities that the price action here is corrective, and we're going to see price taking this double top sooner or later. So this is why the probabilities for another high are at the moment higher, just because of the 886 here. Now in this scenario, we're then looking for a 5-wave impulsive structure to the upside, where we're working on a wave 4 here. The fibs for this wave 4 are taken from the low of 2 to the high of wave 3, giving us a target area between the 236 and the 0.5, 42.8k to 41.6k, with the invalidation being the 0.618 at 41.1k. Now inside this area, we have some interesting additional support, which is this blue box here, sitting between 41.9k and 42.3k. This is the strongest support in this area for me. If price loses this area, we only have a few lows, but then the 618 is coming very close. Above price, we have this resistance area. Of course, we have that range point of control, and then the value area high at 44.3k. Now the whole resistance area here is between 43.9 and 44.8k, with just above price a weekly level as well at 43,950. If we go to a alternative scenario, then we are looking for this scenario here where wave 4 is already in. So we have a wave 1, 2, 3, 4, 5 in. That's a big question mark because of the 886 touch. If we really want to have deeper retracements to the downside, preferably you're not starting with an 886 touch because you want to have an impulsive structure to the downside in 5 waves. And the 886 is a rare target for a wave 2, common for a B or X, increasing probabilities. This is a wave C to the downside to then later turn around once more. The only way to make this a wave 5 and have price moving to lower levels for then a bigger 1, 2, 3, or A is finished, B and then C, is if we're going to have double or triple zigzag. So you have an ABC to the downside, correction, another ABC to the downside, maybe another correction and another one. A double zigzag or a triple zigzag is less common though, so at the moment not yet preferred. Now in this scenario, the reason this is an alternative as well is because this wave 4 is very short in time compared to this wave 2. Fib time taken, the vertical line from the high of 1 to the low of 2, comparing 2 in time with 4 in time, and then put on top of 3. So the 3 pivots are 1, 2, 3 with the Fib time tool, and you can see that at the 0.5 the low was made for this wave 4. Now commonly a wave 4 is longer in time than wave 2, but that is not the case in this particular scenario, which is less common. It's definitely not impossible, but it's just not something you see very often. If we look at the daily gap, then we are now ranging inside the daily gap. So on the daily chart here, we have this gap, big candle to the downside, and we have tested this gap once here and we rejected to the downside, but now we came back for a second time. And the fact that we came back for a second time does increase the probabilities that sooner or later we're going to fill this gap to the upside here to 45.5k. We also closed a candle here inside the gap, as you can see. So it's definitely interesting to keep an eye on the high of the gap, which is at 45.5k, where you also have the golden pocket taken from the high to the low. So that is some interesting resistance inside that area. Locally, we have both bullish and bearish CVD divergences, so they are countering one another. So I'm just being very, very patient and wait to see which one is going to play out. We also have some news today at 8 p.m. Central European Time and 8:30 p.m. Central European Time. We have some high impact news events. That's the reason why these flags here are red. So volatility might increase. So make sure you trade safe around these hours. And if we then look at the probabilities of the different scenarios, then on the low time frame, the 4-hour chart, the probabilities at the moment are neutral, as we are just waiting for price to show what it wants to do, as we expect similar price action in both the bullish and the bearish scenario. Here we could be looking for an A, B, C and continuation down, or we're looking for a wave 1, 2 and a wave 3 for continuation to the upside. On the micro here, more locally, we are looking for some 4-5s to finish, right? We have this scenario over here as shown, where we have the wave 4, currently a higher probability scenario than wave 5 already being in, just because of the 886 touch. And if this is an ABC to the downside, in order for price to move to much lower levels, we then need to think about double or triple zigzags, but that is a little bit less common. Of course, we have some support down here as mentioned, so we got to keep an eye on support. Eventually, we are looking for a bigger retracement to the downside, of course, in a wave B or 2. So, of course, we are always going to keep our eyes open as well for proof of resistance and potential continuation. Now more locally, very, very zoomed in on the 5-50-minute chart over here, right? As mentioned, we have that 886 touch, increasing the probabilities that any move down from the 886 is a wave C or a wave Y, increasing the probabilities that this is corrective, and at a later stage, we are going to see price moving back towards the upside. But as mentioned, we want to see proof of support. We are currently at a little bit of support resistance area, and we have the blue box over here. And once we see some proof of support, that is the moment when we can be looking for price to move towards the upside or not if it fails. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.